the answer for Algorand is, of course, total world domination of crypto. I expect that to be happening in 5 years. But crypto is going to continue to make inroads into traditional finance, and traditional finance, I think, is going to continue to avail itself of the good things about crypto.
So joining us today on Speak Up is Staci Warden. She's the CEO of the Algorand Foundation. Before I get into it with Staci, we do have some exciting news. I just want to prepare everybody, all wealthyon.com listeners, viewers. The date of our next conference is June 1st in conjunction with SALT. Okay, and this is a conference I started 15 years ago here at Skybridge. We have some of the most prominent names on the economic side, equity side, also the political arena. They'll be coming up to talk to you about how to help you grow your assets, invest your assets, how to think about the macroeconomic, geopolitical dynamic, all coming up June 1st. We hope you'll join us. And the details for all of that are on our website, wealthyon.com. Now, Staci, I'm not great at reading prompter. And so right now, my production team, look at the font size of the announcement that I just made.
20 years old.
I'm not great at reading, but that was the best I could do. Go to the wealthyon.com website. But you are the CEO of the Algorand Foundation. It's a Singapore-based entity. It's one of the leading blockchains. And I will point out to people, hold on, because I have props. I wrote a book. Okay, I wrote a book about Algorand. It's called The Genius of Algorand: Technical Elegance and the DeFi Revolution. And so this is a book about what I think is one of the best blockchain technologies out there. It's a layer one technology. You're running the foundation. Before joining Algorand, you were at the Milken Institute, which was an amazing event this past week, actually.
Last week, I was there,
in Los Angeles. I think it's one of the world leading events. And obviously, Michael Milken is a genius. Prior to that, you were at JP Morgan. You've worked at the U.S. Treasury. You worked in NASDAQ. You're a TradeFi person by origin, but you're a DeFi person by calling. I believe that the DeFi world called to you, and once you understood it, you wanted to be a part of it. So let's start there. Pretend I've got people on here that don't really know what DeFi is and don't really know what Algorand is, and take us through why they should be interested in this and what they need to learn about this, if you don't mind. Let's start there.
Yeah. Well, thank you for that. I appreciate that. And I was at Milken Global Conference this week, and it's almost as good as SALT, really. So I look forward to doing them both this spring.
I see, that's very flattering. And so I actually think it's better than SALT, even though SALT is mine. But someday you and I will start the Pepper Conference, and that'll probably be better than both. But go to DeFi. You know, you've made a great career in TradeFi. You've made a great career in think tanks.
Yeah.
But something captured you about Algorand. It obviously captured me. I wrote a book about it.
Yeah.
Tell us what people need to know.
Yeah. So, what called me really was financial inclusion. I saw a number of over the many years that I worked in TradFi, a number of different elements where people were not included, where, you had 2 billion people in the world that can't access money. They can't borrow money. They can't save money. They can't buy insurance the way you and I can. And the paradigm there is you need to start with a bank account. And I grew to believe that you don't actually need to start with a bank account in order to participate in financial inclusion. Then you and I both know that there's a lot of risk in the TradFi system. There's settlement risk, there's counterparty risk. These are the kinds of things that when crypto comes along, they have answers to that. Those answers aren't always perfect, but they have good answers to that kind of thing. And then when you look at blockchain technology more broadly, it brings with it a whole host of other very exciting solutions. The idea that you could program money, that you could put rules around a transaction that would follow that transaction wherever it went from person to person to person. This idea that you could take big illiquid assets, and we call it tokenize them and make them into smaller assets that would enable many more people to invest in them, that would create markets where they didn't already exist. The idea that you could understand the origin of transactions and understand the destination of transactions, all of these things are enabled by a blockchain. And the one sentence on it for me is that I think it's crazy that you can send from if you're in Nigeria, you can send somebody in Malaysia a movie over WhatsApp, and that movie will get there in 1 minute. But if you try to send them $10, it's going to get there maybe 10 days later. A bunch of different intermediaries along the way will have taken, up to 5 or 6% off the top. Why can't you send money immediately from one person to the other? The way that you do that is if all parties are participating on one ledger of transactions and everybody can see what's going on. So for me, this idea, shared knowledge, one ledger that the blockchain delivers is really just an absolute game changer. And I want to be a part of rolling that out globally.
Okay, so I'm going to throw some things at you. I want you to react. Okay. Someday on my phone, this smartphone that's distracting everybody, I'm going to have my money. It's going to be right there on my phone. And I'm going to be able to not use a credit card. I'm going to be able to go right to you, peer to peer. And I'm going to be able to buy a coffee, shop in a supermarket. I'm going to be able to do things that we're typically doing now that have frictional costs to them. Right. If I go to the supermarket and I pay with my credit card, there's a 3% charge to the credit card company. It's sort of an amazing thing. The credit card company has a 3% partnership with every vendor in America. Yeah. There's trillions of dollars that go through the world of finance. Yeah. I tabulated this the other night. I was in a debate where some people don't like blockchain. Other people do like the blockchain. But I pointed out to people there are $4 trillion of costs associated with verifying transactions in our society. $4 trillion. So what you just said, if I heard you correctly, is we now have the technology to bypass those costs. It's the same way we now can make a long distance phone call over the internet, which is virtually costless. When we were growing up as kids, maybe it cost us $3-4 a minute to make that call. Right. We can do all of this now seamlessly. We can be protected by the verification mechanisms of the blockchain. What am I missing?
Yeah, I mean, I remember being, on the Eurorail, like a student backpacking in Europe, and always hoping that my mother would answer when I called collect instead of my father, because the cost was so high. He'd be like, "Okay, honey, I hope you're doing well. Let's hang up." Whereas my mother would keep talking to me, But I think you can get super duper futuristic on this. For example, why are we talking about assets and money as different things at all? If everything is digital and you have, say, an Aberdeen money market fund, you could have this tiniest sliver of that fund tokenized, say, for example, on the Algorand blockchain. You could pay for a cup of coffee with the tiniest little piece of that fund, right? And you could do that directly without intermediaries. And this idea that your money is always earning income, that your bond coupon could be earning money for every hour that you hold it, not have to do this complicated bond math from coupon to coupon payment, right? It becomes very continuous as opposed to a very discrete financial system. There's a rental income protocol built on Algorand called Lofty, and you can buy tiny pieces of rental property for $50 investment. That's already cool enough because that's a kind of investment that normal households don't have access to. But as a rental property owner, you are paid daily on your property, not monthly, because finance is becoming more and more continuous, as opposed to, remember when we all cheered when we went from T+3 to T+2 in traditional finance? It took like 2 years to get that done. This is all, the thing about crypto is that clearing is settlement. There's no difference between it. So back to your cell phone example, is you can get this done immediately. You can make a payment immediately. You can make it with sub-penny transaction costs. but there's an onus on you to make sure that you don't lose your password for your money. These intermediaries do serve a very important purpose. So there's a lot more responsibility involved right now in crypto. And I think one of the problems is that we've got to make it more user-friendly and kind of meet traditional investors in the middle with how well we take care of them versus how much we can save costs by getting rid of some of these intermediaries.
Okay, so we're both, I'll stipulate this. I'm sure you agree. We're both bullish on the sector. We're both bullish on the idea that the blockchain and layer one technologies like Algorand will be used to tokenize real world assets.
Yeah.
I personally just invested in a self-portrait that Basquiat made of himself and Andrew Warhol. The portrait was sold for $32 million at auction a few years ago. The gentleman that purchased the piece of art is a friend of mine. He sold 20% of the painting to a group of his friends, and he tokenized it. And so I bought the token. It's sitting in my wallet. It represents this painting. And so that's happening. It's going to happen in real estate. It's going to happen in other real world assets. I want you to paint a picture for me of where we are in 2029. It's 5 years from now. That was well timed, the horn outside blaring. 5 years from now, where are we? What's tokenized? What isn't? What is Algorand's role in all of this 5 years from today? And as you and I both know, the 5 years comes up very quickly.
Yeah, 5 years comes up quickly. But I think we are in very early innings for crypto more broadly. So I'll start with crypto more broadly. And then the answer for Algorand is, of course, total world domination of crypto. I expect that to be happening in 5 years. But crypto is going to continue to make inroads into traditional finance. And traditional finance, I think, is going to continue to avail itself of the good things about crypto. So we just had Sandy Call, who runs all digital projects for Franklin Templeton at the Milken Global Conference, for example. And she said that she has saved, where they are using blockchain solutions for their money market funds, they've saved something like 500x in cost reduction. Just adding securities in and out of ETFs is much cheaper if you have them on a blockchain, as opposed to if you are kind of moving paper around back and forth to each other and you have a million different databases trying to talk to each other. The problem with moving TradFi to crypto is that it's very hard to move by yourself. Everybody has to kind of agree to move together. But I think where we'll start is in sucking costs out of the system. So if you think about a securitization vehicle, a lot of this is very simple math on a spreadsheet, but it can take 15% sometimes, or 15 basis points sometimes out of the cost of putting your house and securitizing mortgages and all alike. And you can imagine the paying agent, the calculation agent, the prime broker, all of those those costs could be extracted, I think, to a large degree. So I think traditional finance will start by looking at their back offices and trying to find ways to save money. And then micro payments and other kinds of payments, programmable money type payments will start getting used more and more and more. Third, I think markets will begin to be created where they don't exist now. So for example, another protocol building on Algorand has started a secondary market for airline tickets. So if you buy an airline ticket and you don't want to make that trip, you have to give that a ticket back to the airline, and you're going to get fined, or you're going to have some restrictions around how you can sell it. But now if you look at the Air Bondi website, which is the first airline that they partnered with, this company is called TravelX. If you look on the Air Bondi, there's now a marketplace where people are selling their tickets back and forth to each other. And if I'm a gold standard flyer, I can sell my lounge pass with my airline ticket to somebody that might want to buy it. So that's that third piece. I think creating markets where they don't exist. I think that things that can be digitized will fall naturally into this kind of new world. The tricky thing always is going to be two things, I think. One is getting real world assets to talk to digital assets. And so there you're going to need Internet of Things type solutions to make sure that you bridge those gaps. This will be like sensors on cargoes so that you can follow the supply chain. And the other piece will be user acquisition, mainstream, making it friendly for people. And I think we will see advances in both of those things, making it more user friendly for mass adoption, and making and finding ways that the real world can talk to the digital world. That's right. And I think we'll succeed on those things in 5 years. And Algorand, I think, has some very unique, I'm not going to turn this into a commercial for Algorand, but it has some very unique properties that make it particularly good for traditional finance operations. It can do 10,000 transactions per second, for example. This gets very technical, but when you make a transaction, it's immediately final. And surprisingly, to a lot of people, that is not true with really every other blockchain. You have to wait a little bit to make sure that your transaction is final. Now, you cannot give Bitcoin a hard time for having to wait 15 minutes when in traditional finance, you wait 2 days, of course. So it's already anywhere is better than, in traditional finance. But with Algorand, it's actually immediate. It's instantaneous, and, transaction costs are sort of sub-penny. So we think we're going to be able to compete pretty well as these two worlds start coming together in the next 5 years.
I mean, I brought you on for a reason, by the way. I'm a bull on Algorand, and it's okay to talk about Algorand. I appreciate the elegance of you not wanting to make it an advertisement, but I think it's important for people to understand it because it has unique technological characteristics where you can get high speed transactions, low cost, high security. And these are problems. Vitalik Buterin, if I'm pronouncing his name right, said that one of the big problems is the trilemma for blockchains, right? We can't have everything. We can't have high security, speed, and decentralization all at the same time. But you seem to be getting that with Algorand. Tell us why.
So the juice in any so a blockchain is run by a bunch of different computers that don't have to trust each other and that don't talk to each other. And the reason that Satoshi Nakamoto is a genius is because he figured out a way to get all of those computers to agree on the order of transactions on the blockchain. And that was the beginning with Bitcoin. But getting those computers to agree is called the consensus mechanism of the blockchain. And we were founded by a Turing Award winner from MIT. He invented a couple of cryptographic primitives that the entire ecosystem uses: verifiable random functions, zero knowledge proofs. And he came up with a very elegant way for these computers to come to an agreement quickly and where the decentralization of those computers did not mess with the scalability of those computers. So if you talk about Ethereum, for example, it's very, very decentralized, but it doesn't scale very well. The transaction costs are very high. They're called gas fees, and they're very high. If you look at another protocol like Solana, for example, it's a very fast protocol, but it's not particularly decentralized. You have to run enterprise-grade hardware to participate in that network. With Algorand, you can participate in the security of that network with a laptop, a performant laptop, but you also have a lot of scale and speed to it. And we are quantum secure. That comes from having some brainiac cryptographers working with Algorand. So the history of transactions on Algorand is quantum secure, meaning you cannot go back in time and say, oh, Staci didn't really pay Anthony. Actually, Anthony paid Staci, and change that. And so that I can kind of double spend the same amount of the same dollar that I have. So we solved what is called what Vitalik Buterin's very famous trilemma. So we were able to get decentralization and at the same time speed and scalability, and at the same time security. So thank you for teaming me up to talk about that. But that's our core value proposition.
If someone's going to tune into this show, a lot of people are not where you and I are. I had the eureka moment 5 years ago. Knew I had to be in this part of the world from an investment point of view, needed to understand it better. Some people are going to tune into this show. I want a part of it. What makes this show successful is here's a portal. Here's a look into the future. And you've described it eloquently. Talk about the the roadmap ahead, the consensus incentives coming up. I had the chance to be with your CTO serendipitously this morning, and he was talking about some of the things that are coming up in terms of tokenomics for Algorand and some of the things you guys are working on. Tell us about that.
Okay, well, as I said, we were founded by an academic, and our academic is very, let's call him pure of heart. And he recognized that you only need a laptop to help run this protocol. And so he said, you as a good citizen, if you avail yourselves of this ecosystem, you as a good citizen should help keep up the security of the network. Every other blockchain, though, pays you to do this, to keep up the security of the network by staking your currency of choice or by mining in the case of Bitcoin. So we have decided to move to a form where you're going to be compensated for putting your algos to work to secure this network. Now, the difference, and we call this a pure proof of stake, because unlike other networks, you maintain ownership of your algos. You're not locking them up anywhere. You can continue to use them. But if they're staked now, for the first time, you will be able to earn money for performing that service. That is very easy for me to say, but that is a very big engineering project. And we have been working on that for, a good part of a year. And when I say we, I mean the brainiacs over at Algorand Technologies in Boston. But they are building that out, and we expect to go live with that this fall. So if you want to participate and you will be able to do this easily. It's not that you have to go and get a mainframe computer or any of that other nonsense. You can do this easily, and you will be able to earn money for the work that you do securing this network. So it's pretty exciting because the energy footprint of this network is about that is required to charge a Tesla for a year. It's a very lightweight. It's a very lightweight network, but you do have to stake your algos to make sure that we're decentralized enough, because that's a part of where our security comes from. So we're going to pay you to do that. And I know you're going to do that, Anthony. So
I love money. So of course I'm going to be doing that. You have a new CMO. I also had the opportunity to meet him this morning.
Okay.
Your new CMO told me that for the last 10 prior years, he worked at Google to build out something called Android, which is
right.
the largest software package operating system for cellular phones in the world. So it's not just Samsung, it's Motorola, it's everything other than Apple is coming through Android. How did you snare him? Tell me, I need recruiting techniques from Staci Warden of the Algorand Foundation. So give me the pitch. How did you snag him?
Yeah, I'm sure some members of the Algorand community are also going to be listening in. We have had some marketing stalling on Algorand for some time, and we had a good CMO before, but not quite a good Web3 CMO, I will say. Very talented, but not right for us. And so I could not make a mistake with our CMO again. The community has no tolerance for this at all. So I really needed to make sure that I got a perfect CMO. And when you think about Android, and he told me when I first had the opportunity to speak with him that he had a budget of $30,000 when he started, and there was no Android on one phone, and he had to build this thing up from scratch for Google. And it occurred to me that Android's an operating system in the same way that Algorand is an operating system. And what you're trying to do with Android is to get developers to build on Android and not just build for iOS. And I want developers to build for Algorand and not, Bitcoin, say, right?
Yep, it's a good point.
So it's the same thing. So I immediately intuited that if this guy was competent, that this is the kind of experience that I wanted. Plus, of course, the Google name. The first question he asks is this going to scale? Right? That's how he was taught at Google, and that's the first thing he comes to. The approach that he comes to. Now, he has been helped enormously by John Woods, our CTO, who has spent the last 2 years making Algorand fully Python developer environment. So all you need is to know Python. There are 10 million Python developers in the world, and you can build on Algorand, because we are thinking about these these computer coders and engineers, they have good jobs. They're curious about Web3, but they're not going to learn a whole new language and a whole new thing on the chance that Web3 might work out. But if it's already in Python, and I am not talking about some slightly modified version of part of Python, I'm talking about Python. You know Python, you can write smart contracts in Algorand. Then, okay, they'll probably say, well, why not? Let's give it a whirl. And since we're a very performant chain on the back of that, we're expecting a lot of engagement and a lot of building. And Mark, his name is Mark, really knows how to get at those developers and how to get them excited and how to make a bit of a splash. But I will say, we are giving him a lot to work with that we did not have to work with a year ago. So it's a good, we're in a good part. We're in a very good spot right now, I think, for 2024 for Algorand.
So, Staci, I ask this every week, and you're a smart person, been around the investment world for a very long time. Is there something actionable that you could recommend to Wealthion listeners, viewers of this program? You say, you know what, this is something I see right here, right now, that you can take advantage of, or you should potentially invest in?
Well, you know, I have just come from the Milken conference where the world's greatest investors have been there. And so maybe I can be forgiven for stealing some insights, I think, from some of these amazing institutional investors. But compared to last year, everybody thought that 2023-24 was going to be the hard landing. They were hoping for a softer landing, but really expecting the other shoe to drop. You can't just raise interest rates 11 times in a 2.5 year period and expect nothing to happen to the economy. And this year has been very much an acknowledgement of the fact that we have so far been in a bit of a Goldilocks situation. Now, that does not mean that the business cycle as a concept has been killed, right? We still have a business cycle. There could still be difficult times ahead. But so far it's been pretty good. And if you look at it globally, I think the smart money really is on the US. And I say that despite all of the problems people are saying with the politics, the fact that probably neither one of us, nobody here would hope that the two presidential candidates we have are the two presidential candidates we have. Despite the budget deficit of 6 to maybe even 7%, all of these kind of headwinds, I was very struck there by the fact that people are still bullish on the United States, and the United States is the place to.
So the S&P, buy the S&P.
Look, I always say, if my friends come to me and ask me for investment advice, I say first, leave it to the professionals, and second, be diversified. And so I think if you don't have a lot of time and a lot of expertise, you're definitely better off buying a broad index. This is why these Bitcoin ETFs are so exciting, by the way, because, there's let's call it $4 trillion odd in retirement income. And people of our age, Anthony, we typically use registered investment advisors, and RIAs, they typically buy ETFs, right? Mm-hmm. And so, the idea that, wealth advisors like you guys, you are, of course, the professionals that people should leave these decisions to, but mm-hmm. also you have an opportunity now to have an entirely new asset class in a product that your users are that your customers are comfortable understanding. And so if you take those trillions of dollars in assets under management that advisors like Wealthion have, and you just imagine, this is not financial advice, but you just imagine 1%, 2%, 3% in a Bitcoin ETF, for example, then that's, to me, a very interesting way to diversify. And it's a bullish, of course, signal for the sector as a whole. And the cryptocurrency sector as a whole does tend to follow Bitcoin's lead. Mm-hmm. I think that was a bit garbled, but I hope I got my point across.
Listen, I think it's important because you're tapping into the consensus of a lot of very smart people. And of course, for those listening in, you can go to wealthion.com and you can yourself plug into our group of RIAs, Wealthion advisors, if you will, for free consultation. So just have to go to wealthion.com.
Yeah.
Before I let you go, we take questions from the audience.
Okay.
So we're going to fire up some questions. And
All
here
the
we
hard
go.
questions go to Anthony. All the easy questions should come to
All
me.
right. Well, I'm going to read them, and then you tell me the ones you want to take. Okay, you ready?
Okay. All right.
The economy on paper seems to be going in the right direction. However, I want to be prepared. What are the top things you suggest to protect myself from an economic collapse? This is Johnson from New Hampshire.
Okay, I think if you are a global investor, I think the problem always is that when the neighborhood starts going, the iffier neighborhoods go first. And so you want to be in the center of town, as it were. So I do think if the economy globally starts to get in some trouble, I think you want to bring back to the U.S. I think you want to make sure you are in a well capitalized, too big to fail bank. I think you should make sure you probably stay under the FDIC 250,000 limit in each bank. I like property for diversification, and I think you should consider some small allocation to digital assets as well.
All right, so it's good. It's a great answer. I think the biggest thing, Johnson, is stay diversified, but stay optimistic. I think what ends up happening is we get very nervous when economies are shaking or there's a recession or a financial crisis, and we get nervous. But the best thing to do really is just to sit tight. Let's go to the next question. I know that things. I'm sorry, that's the same question. I apologize. The money supply. Can you give me a boiled down explanation of this term? I've heard it thrown around a lot in relation to inflation.
Okay, so let's say I like to think about these things in terms of first principles. So say you have this economy, and let's call it Wealthion. And in Wealthion, there are 10 people, and the central bank of Wealthion has $10 that they give out. So every dollar has a person. The person A produces A's, person B produces B's, and they all cost $1. Now, if the central bank of Wealthion decides to increase the money supply, they print money. It's a little bit more. There's more mechanics to it, but basically they print money. And if they print 10 more dollars, then you have inflation because every person now has $2 each. So you have inflation in your economy. The problem is that person C maybe will raise their prices to $2, but still only pay person B $1. So person B ends up in real terms worse off because of this inflation. Person D might have a debt to person C. Now that debt is used to be $1, but now that debt is half as expensive because it's $2 for the economy. So the debt got easier to finance. So this kind of inflation, it hurts savers and it tends to help debtors, but it comes from a central bank printing money. Now, if Wealthandia gets 10 more people, and there's still only $10, then you don't have enough money in the money supply to support the economic growth of Wealthandia. So it's a very tricky road that the central bank has to walk to make sure that the money supply increases with the amount of economic activity, but not too much so that you get inflation. If you trust your central bank, then you're very happy with that fiat currency. If you don't trust your central bank at all, you tend to look towards a money supply that is embedded in code. And so the interesting thing about the Bitcoin money supply dynamics is that it is written in code. It was written down. It can't ever change. Now, you would never pick that versus the Fed, never, because you need a flexible money supply. But you might pick that versus Zimbabwe, right, or Argentina if you want to hold wealth.
Yep. With interest rates where they are now, is real estate worth investing in? This is Ty from New Mexico.
Well, I will let you take the empirical answer to that, but I will just say I think about these things in terms of first principles. So for me, it's not so much where the cost of money is. It's, can you find a use for that money where you get a return on that money that is higher than the cost of the money for you? As long as you do that, you should make the investment. And if you can't do that, you shouldn't make the investment.
Well, I'll add to that, and I'm here in Midtown Manhattan, where you can hear the sirens. If you have cash flowing real estate, and you're thinking about it from a property perspective to generate income and eventual appreciation, then I would say take a long term approach to the real estate. Remember, even if you have interest rates that are several hundred basis points above the peak. If you were lucky enough to buy a house in 2019, 2020, you have a 2 5/8 mortgage. Today, you may have a 6.5, or even 7% mortgage, depending on the timing. But remember, you can refinance these loans fairly easily if rates go down. And so I'm a big believer of making core investments, whether it's in the stock market, real estate, the blockchain, making core investments regularly, irrespective of current rates. But it's a great question. Let's go to the next one.
Yeah,
I'm sorry, Greg, did you want to add?
No, and just that when interest rates are high, sometimes that has a negative impact on prices. So you might be able to buy the property for cheaper, given that interest rates are higher too. So you have to kind of think of it all together.
All right, so we have a really smart question coming in from Andrew from Florida. I'm in my 40s, and I've always put 8 to 10% of my salary into a 401k.
Nice job, Andrew.
Yeah, which is a great job and lots of discipline. Yet Fidelity, when I go on their website, it says I'm still not in a strong enough position for retirement. 500k in a fund. And so the question is, what am I missing? And I'll start. I say, Andrew, unfortunately for this stuff, you've got to go up the risk curve. I've done so many stupid things. I have phone books of stupid things that I've done over my career. But one of the smartest things that I've done is similar to you. I maxed out on my 401k starting in 1989, put 100% of it into stocks over that period of time. And in the 35 years of my career, that has served me and my family very well. And you're a young man, you're in your 40s, put the money in the stock market. Be brave. Don't hang around in the bond market because over 30 years, if you think like Warren Buffett, you'll be well rewarded. And of course, you could always plug into one of our wealth advisors at wealthyon.com to get connected there. I'm going to go to the next question. I'm going to let you, Staci.
Let me say one thing on that too. Always do as much as your employer will match. If your employer matches, you have to put 100% towards up until your employer matches.
Well said. I should have added that. I'm glad you did. Okay. So James from Vermont is asking a question, and maybe you can provide some of the differences. Like, what is the difference? I've seen you talk about Solana a few times.
Wait, what is he saying? Anthony, you talked about Solana a few times. What's that about?
Okay, so let's talk about it. What are the differences between Solana, Algorand, Avalanche? What are the differences between Ethereum and something like Bitcoin?
So Bitcoin is the first, as you have said, and it is very much like a digital gold. And the reason that it holds the value proposition for holding Bitcoin is basically twofold. One is that the money supply is fixed in code, so you can never kind of inflate that money supply away. And number two, you can never shut it down. I mean, Bitcoin is run by computers all over the world. It is very secure for that reason. No one government, be they the US, be they China, be they Russia, can ever shut Bitcoin down. So if you want to hold assets digitally and not in bars, Bitcoin is an option for you there. The thing is, though, it's like an army base that is extremely secure, except nothing really happens on that army base. There's no cards, there's no girls, there's no, fun, there's no mess tent. So Vitalik Buterin came along and said, we could make this blockchain more programmable and it could do more things and also stay quite decentralized. And so he introduced this idea of a blockchain that you could program and do things with. And so I won't get into all of the details, but the blockchains that have come along since then have all basically been in this vein. So they've seeded this digital asset space to Bitcoin. And now the rest of the blockchains are trying to figure out how to be the most versatile, how to get the most things done, and these trade-offs around sometimes performance and decentralization and security. So Ethereum came along and said, you can do all these different things. You can really, what he introduced was programmable money. It's decentralized, but it's also not very fast and has some still costs associated with performing on it. Then people try to lower those costs by building things on top of Ethereum. Our founder watched all of this develop. And as I said, he invented some very important cryptographic proofs. He never had the idea to attach money to them, but he watched this and he said, I think I could probably build a good one of those. Like, I know how to build this. And so he came along and he built Ethereum, and Algorand. And Algorand takes the best security principles from Bitcoin and the best programmability from Ethereum, and we have a very performant blockchain, I would say, in those regards.
That's a great answer. Thank you. This is another question from a business owner. This is Adam from New York City. Barely anyone I know is signing a commercial real estate lease. What do you see for this market in the coming years as pre-COVID leases expire? And I can say this from the restaurant business because I own a restaurant in New York City with a few friends. The foot traffic at our restaurant is down 35%. And so the question, Staci, for me is, will people return to work, or will there be this working mobility? I can say here at Skybridge, and again, I'm being very honest and vulnerable, I probably have twice the size of an office that I need. And you can see behind me, there's a few empty desks. There's some people working. If I move my head, you can see them. But the truth be told, we have a lot more work flexibility now than we did a few years ago. And I think people will downsize accordingly. I think it could have a negative impact on commercial real estate. What say you? Do you have anything to add to that?
Yeah, I mean, I will say I'm really looking forward to my ability to buy a nice apartment on Park Avenue. I mean, I might have to have a copy machine next to my kitchen, and not every room will have windows, but I really am looking forward to the repurposing of all of this office space into nice apartments for people. Look, I'm not going to comment really on the commercial real estate market, except to say that those of you listening that are in your 20s, especially, but in your 20s and 30s, go to the office if you can. I mean, you are really missing something. It's okay for me to work from home. It is not okay if you're in your 20s to have a career where you are working from home. The culture, the mentoring, the being in the information flow, this is really, really important. So if you can get in there at least 3 days a week, but if you can get in there 4 days a week, it will be very good for your career. I promise you that.
Well said. Any more questions out there, team? Well, Wealthion, would say we see you too much, but some of our Wealthion family may want to see you speak in person. How can we find the dates and locations of your book tour? Okay, these are the few ball busters in the control room, Staci. Okay, and I will be at Next Chapter Books in Huntington on June 5th at 7 p.m., which is a great local bookstore, and I'm a Long Islander, and I'm looking forward to that. But what I will do on the Wealthion website, for those that are interested, I'll post where I'll be. Bring eggs, bring tomatoes, anything you'd like, and I could look forward to you throwing them at me. But in the meantime, you are a great friend and a great business partner, and I want to say thank you so much for joining us on Speak Up today.
And I will say, go get this book signed. I just read this book last weekend. It's a terrific book, Anthony. I thought it was, I mean, I read it in 2 sittings. I was completely captivated by it. It has great life. You're very humble, and you really expose. You're very vulnerable, I think is really the right word. You really show your vulnerability.
Try to write a real book, but I appreciate you saying that.
Try to write a real book. Exactly.
I'll add you to the list, the short list of you and my mom who have thus far read my book. So I appreciate that, Stace.
And nice short chapters, really good advice. And I see you, it's really written, and you do feel like you're talking to you. Really a very nice style. And I enjoyed it very much.
It's sweet of you. We'll keep you on for another half hour. Let's not cut the show yet. All right. God bless you. Okay. I'll see you soon.
Okay. God bless you all. Thanks, Wealthion, for having me on.